Well, there's something quite romantic about a mechanical watch in the sense that it will run in perpetuity if you take care of it in the most basic of ways. So, I mean, literally, somebody 300 years from now could pick up a mechanical watch and get it working again. You certainly can't say that about the Apple Watch or any device that we have.
I want to understand what this industry teaches us about how humans decide what is worth preserving. My guest today has spent decades observing this world from the inside, not to promote it, but to witness how value is constructed, defended, and sometimes broken. Today's conversation is not about trends or brands, it's about value, how it forms, how it survives, and how it fails. This is Immortal Capital. Welcome to the show.
Thank you so much, Jad. Nice to be here.
Yeah, thank you for coming, Victoria. And I wanted to, for our audience, just if you can present yourself quickly and your background in this industry.
Sure. So my name is Victoria Gomelsky. I'm editor in chief of a trade publication based in New York called JCK. It's was founded in 1869 and it goes out to retail jewelers across the country. It's known as the Industry Authority. So that's one of my roles. I've been editor in chief since 2010. I am also a longtime freelancer for the New York Times. I write for their luxury sections, primarily watches, jewelry, craftsmanship, luxury gifts, and I've freelanced for the Times since it was the International Herald Tribune. So I started writing for the IHT in 2006, and then the New York Times Group bought the IHT around 2010, and so I've been writing for those sections ever since. I'm also a longtime freelancer for Robb Report, which is a luxury magazine. Goes out to consumers. There's multiple editions globally, but I write for the U.S. edition. And I've been covering this world since 2000 when I started, my very first job in this industry covering it. I came in as a writer, so not as a specialist in jewelry or watches or and had any particular interest or background. I just happened to get a job, and this was New York in the year 2000, and it turned out to be a really amazing trade to slip into because I fell in as a trade writer, not as a consumer journalist. And both jewelry, covering both jewelry and watches, and 25 years later, I'm still making my living that way.
Great. I'm very excited to go straight into it then, since you have such an extensive experience in this world. So
Yeah.
my first question would be why mechanical watches still exist? In purely functional terms, mechanical watches should be irrelevant. Why hasn't the market treated them that way?
Well, there's something quite romantic about a mechanical watch in the sense that it will run in perpetuity if you take care of it in the most basic of ways. So, I mean, literally, somebody 300 years from now could pick up a mechanical watch and get it working again. You certainly can't say that about the Apple Watch or any device that we have. So, one of the aspects that mechanical watchmakers like to tout is just the inherent sustainability of their products. One of the reasons this world has become it I mean, mechanical watches have existed for centuries. I mean, prior to that, there were clocks and then pocket watches, and the first wristwatches really came into fashion around World War One. And back then, they were just objects of purpose. Clearly, people needed to know the time. It was a way to democratize time. Prior to people having pocket watches, it was the church, clock in the center of town that told you time, where perhaps the factory had a clock, but when people were able to put time on in their pockets and later on their wrists, it gave them quite a bit of freedom and independence to manage their days and their time. Throughout the 20th century, they remained objects of purpose, really, until the quartz crisis, which I don't know if many people know that happened, really kicked off in the 70s or late 69 when the first quartz powered wristwatch was introduced by Seiko. And throughout the 70s, the Swiss mechanical industry grappled with, a great deal of layoffs and great fear about its future because quartz watches were much cheaper, much more accurate, and they decimated the Swiss industry. Something on the order of, 60% of, Swiss mechanical watchmaking jobs were lost during that time. And a lot of brands, you know, that were storied brands in their day that had quite a lot of cult followings and so on, disappeared and still haven't returned or reappeared. But what happened to those brands that did survive the quartz crisis is that slowly, as the 80s came on and in the 90s, when people started to collect these objects, these wristwatches, they became objects of luxury and they became objects of status and wealth, heirlooms. Patek Philippe in 1996 famously introduced its Generations campaign, which many people have seen it in magazines because it's still going. Something along the lines of, you don't simply own a Patek Philippe. You're the custodian of it for the next generation. You're going to pass it on, and that thinking has really permeated this industry ever since. I mean, so by the 90s, people were starting to collect these things, but they were not, the mainstream hadn't gotten, um, it's not that they hadn't gotten wind of it. It's just that, there were still plenty of quartz powered watches out there, the fossils of the world, the fashion watches that came up in the 2000s. But over the last 25 years, we've really seen wrist mechanical Swiss watches primarily, although there are great products from Japan and Germany and Great Britain. We've really seen them corner the luxury end of the market. So they have a whole different purpose now, which has nothing to do with telling time. And that is why we still see them, and as we get into this conversation about assets and a new asset class, um, many people talk about some watches, certainly not all, and there is a limited small amount of brands and models, but they're global currency. You can take them to Asia, Africa, South America, and they will trade for what the market bears. And they are really considered, financial assets at a certain level. I wouldn't say, but it's hardly the entire industry. But there are certain models and makers that really even command premiums, certainly in the secondary market. So it's been a wild thing to witness over 25 years because it wasn't that way in 2000 when I started.
Yeah, the two main shifts that the way I see it is, first of all, it should be like extinct, but they turned it into something else, like a collectible, but at the same time a luxury item because it became decorative rather than functional. So, like a Birkin bag, or
Yeah.
so men wear it. It's like maybe the only jewel that a man is currently acceptable to be wearing, and this shift begs the question, like what makes a watch becomes like a good investment, or like money, like where you can trade and consider it as a real asset. Is it the jewelry part, or is it the collectible part, or it's a combination of both? How do you see it?
I would say it's less the jewelry part. It has to do a lot with a certain, uh, uh, we call them the big four. There are others outside of that big four, but the big four are Rolex, Patek Philippe, Audemars Piguet, and Richard Mille. Um, Sometimes you call it the big three, which are the three. Richard Mille is a little bit of an outlier because it's a more contemporary brand. It was founded, I believe, in the late 90s by Richard Mille, a French watchmaker, and it has gone on to really revolutionize aesthetics and the sense of, in an avant-garde sense. It's really kind of a very futuristic looking type of watch. But the first three, Rolex, Patek Philippe, and Audemars Piguet, have all been around. I mean, Rolex is the youngest of those three, founded in, I want to say 1912, around there in London by a German actually. But those brands and a handful of others outside of them um, have just this halo of status and desire and luxury that follows them around. I mean, they really can do no wrong. It's not necessarily that they make better watches than everybody else. The Swiss are incredible at making watches. They've got this down to a science. They have, it depends. There are different ways of making them. Either you make them entirely in house and you have a whole team that builds the movement, assembles it, or you buy movements from elsewhere, from outside suppliers, and then case them and assemble them in your own factory. It almost doesn't matter anymore because the quality is, is triple A. There's really very few brands that aren't working at that level among the Swiss. I mean, at a certain price level. Rolex has captured the imagination over the course of the last century, and it now commands a full third of the Swiss watch market. One out of every three Swiss watches that is, statistics are a little hard to come by in the industry. We have export statistics from Switzerland, and then some sales figures, but uh, they're not ideal. But in any case, Rolex commands a third of the market, which is staggering because there's hundreds of brands. Patek Philippe right up there as well. Audemars, and again a few others that kind of jockey for position under those three. Cartier has had a phenomenal few years, and a phenomenal century for that matter. There during the pandemic really was a turning point. It's funny. Last night, maybe to back up, I was looking at the history of Bitcoin and realized that the modern watch market follows a very similar trajectory to the Bitcoin market or to crypto. I mean, after the financial crisis, watchmakers were struggled just like everybody else. There was a great deal of, just industry wide panic about how this would play out for the luxury industry, except for one aspect of it, which was that China was just starting to come up as a consumer market. I mean, it had been there, but after the financial crisis around 2012, 2013 is when you saw the Chinese start to buy. And you know the watchmakers are so global that even though America and other market Europe were down, China represented a huge opportunity for them. So that's where, in some sense, that's what saved the Swiss during those tentative years after the financial crisis. Things sort of plodded along, and then around 2017 is when we saw a spike. In fact, I wrote an article for the New York Times a couple of years ago called, the headline was 2017 was a turning point in the watch industry. That was the headline. And when I looked at the trajectory of Bitcoin, I noticed that 2017 was also. So there may be a tie to that because as we get to the pandemic, um, cryptocurrency and crypto buyers started to play a role in the watch market. Prior to that, I'll stick to 2017 and tell you a little bit about what happened then. Essentially, watchmakers started to think much more seriously about their distribution. They started to clean up some of their distribution channels. There was a whole gray market that existed where it was unauthorized dealers, legitimate product. It wasn't fake. It was just distribution channels that weren't closely guarded by the Swiss. So there were a lot of watches out there that the Swiss weren't sort of they were going through unauthorized channels and they were flooding the market, and so prices were on the secondary market. There wasn't much of one. I mean, you could buy vintage pieces, but there wasn't much of a market where you saw pieces that you couldn't get at retail. um, well, let me back up. You couldn't there wasn't really talk of a secondary market where watches were going for premiums in secondary channels until around 2017. So a lot of it had to do with watchmakers pulling back on their supply. That then you hit the pandemic when people are in lockdown. They have time to start cruising the web, thinking about their interests, starting to go through, down rabbit holes of content. There's a lot of social media and a lot of Instagram posting that's been going on for a few years. So there's content, there's information that they can educate themselves on. There's, money being pumped into the system by central banks, so they're not spending it elsewhere, and they start looking around and they start to try to buy. And as the watchmakers have been cleaning up their supply, there's less supply. There's also factories have been shut down due to the lockdown, so there's even less supply. And so you get this situation where a couple years into lockdowns, around 2021, you see certain models, Rolex Daytona, Patek Philippe Nautilus, Audemars Piguet Royal Oak, that are trading at 5 times their retail value on the secondary market. And a lot of that was speculative. A lot of that was fueled by crypto buyers. And there was this sense that, you were, I mean, dealers, they look back at those days, they were making money hand over fist. They didn't have to do anything. Every month there would be a 10% increase in the prices. And so that all came crashing down, starting with the start of the Ukraine war in February of 22, amplified, by the crypto collapse in May of 22. So it's not that the secondary market collapsed, it's that prices just came down. It wasn't sustainable at 5 times retail value. So what we're at now is a healthier secondary market. I think a lot of watch people in the watch industry would say this is a much more healthy market, although 2025 has been very challenging. But you still have this sense that this is a new asset class, and there have been a lot of developments over the last couple of years that with third party companies trying to come in and standardize this industry, it hasn't really had a lot of infrastructure. And we're just seeing that now. We're seeing finance platforms pop up that have a more fiduciary kind of positioning where they want to help standardize things like invoicing and this is all with respect to the secondary market. Now the primary market continues to operate, continues to it's a bit depressed because this year has been such a struggle with tariffs. Now Switzerland got a really bad deal. It's now been sort of moderated or mitigated, but Switzerland at one point for the bulk of the tariff regime was at 39%. And so a lot of watchmakers raised their prices to try to, you know,
Compensate.
make up for these tariffs. And so it's been a really challenging year for the primary market. Secondary market has kind of felt the bump because when people are buying through a pre-owned dealership, they're not necessarily paying tariffs. It depends on, I guess, where the pre-owned dealer is. But and prices have started to rebound, and the auction market has seen a phenomenal year. There's specifically a whole class of watchmakers. I don't know if you're familiar with the term independent watchmaker or that category of watchmaking. It's led by a man named F.P. Journe, Francois Paul Journe, whose brand is F.P. Journe, and
Pigeon, yeah, I know it.
he's French, from Marseille, I believe, but has lived and worked in Geneva for years. He just had a record-setting spate at auction. One of his pieces, it was a prototype that was owned by Francis Ford Coppola, the director, just sold for over 10 million at
Oh wow.
Phillips, New York,
Okay.
which is certainly the highest price anybody's ever paid for an FP Journe. It's almost what they paid for a set of Patek Philippe, very famous pocket watch, as a set of four called the Star Caliber that sold at Sotheby's in Abu Dhabi for about 11 million. So honestly, the fact that FP Journe is at that level it's a tremendous result. Honestly, I think says a lot about what people are willing to pay for genius watchmakers, and for these watches that are now really utterly collectible and are appreciating at a crazy rate.
It's funny that you mention the parallel between watch prices and crypto. The way I like to look at it is my Bitcoin conviction is shares two elements that I find in the watch industry, which is the scarcity. So because it's limited, and but in the watches, it's a manufactured scarcity done by the watch producers.
Yeah.
But there's also a kind of cult movement, like Bitcoiners want not only to adopting the technology, but also all the revolutionary insights it brings to changing the world and making governments accountable and so on. So they tend to gather around ideas and they share like some values around these ideas.
Hmm.
And I see the same cult also going on in the watch industry, but I don't know how strong it is compared to Bitcoin, or how the scarcity manufacturing is a real thing, or it's more about the cult or the trends, I would say, that comes in the watch industry. How would you rank uh, the main factors that makes a watch desirable?
Well, the maker, again, there's just this halo around certain brands, and so, I mean, there are followers of all kinds of brands. I mean, there are people who are obsessed with British watchmaking and follow brands based. There's a small watchmaker on the Isle of Man named Roger Smith. When you talk about the independents along the lines of F.P. Journe, Roger Smith, and there's a whole class of them. I mean, scarcity is, I wouldn't say it's manufactured. It's legitimate scarcity because often they are at the bench making these pieces, or at least overseeing the process. And there's only so many watches, especially when you're talking about complicated watches, which are watches with more than just time and date functionality. They can, in some cases, they can, you know, there's perpetual calendars which can tell when a month is has 30 days or 31 days. They change automatically. They know when a leap year happens. They'll be accurate for hundreds of years without any adjustments. So these are
Yeah, but all
complicated.
these can be industrialized. So it is a manufactured scarcity in the sense that they are keeping themselves from industrializing it and keeping it a handcraft rather than a
Yeah, I
big
mean,
plant producing all these technicalities, because all these can be done in a mass productive production setup,
they can.
right?
They can, and so it is a very much, but I think that's the appeal for many people, is that this is an, especially in a digital age when everything is speed produced, manufactured, drop shipped from wherever, China, presumably. Um, the fact that there's a watchmaker, one very, very famous one at the moment, certainly has captured. He interned at, was an artisan or an apprentice at Patek Philippe and F. Journe, is named Recep Recepi. He's a Kosovoan by birth and is based in Geneva. And his pieces are also commanding incredible sums. But he's sitting there at the bench himself and is committed to this hand craftsmanship and the finishing that you do on a watch. I mean, no, you don't have to buy a. I mean, you can buy a watch that's been made in 10 days or 5 days or whatever, that has come out of an industrialized factory. And I've been to many of these factories. But when you get to the independents and the people that are really committed to that handmade aspect, it is just such a stark contrast to what's out there in the world, that I think that's what draws people, is that these are produced by human hands. They're crafts on, centuries old crafts that have, and a lot of these complications were invented hundreds of years ago. There's not a lot of innovation. I mean, every now and then you will. Rolex introduced a watch last year. It's called the Land Dweller, and it has a new escapement that's kind of the heart of the watch, literally the beating heart of what makes a mechanical watch tick. And there was something quite new in there. It was literally the first new escapement in 200 years. Well, apart from very artisanal escapement makers, I mean, the first new industrialized escapement. So, um, there's not a lot of newness in mechanical watches. They're operating on very old technology, but it is the fact that they are handmade that people are drawn to, and that is what they value. But then there are brands like Rolex. I mean, they're the most opaque company in this industry. I mean, in a world that values transparency, Rolex manages to be the number one company by a long shot and still remain incredibly opaque. They don't give interviews, very rarely, very rarely. Their CEO currently has given a few, but it's so rare. They don't speak to press. They command and control every aspect of their communications, which is a good part of their success. But oh gosh, I had a point. What was it? I was totally making a point about. Oh God, well, we'll probably have to scratch this from the edit. But oh God, sorry, I lost my train of thought.
No worries. But you were mentioning earlier that there was a peak and then there was a correction after the Russian war, and the whole situation kind of calmed down. Who didn't survive this correction, or like, does the price impacts the long-term image? Like, when there's a price connection, does it hurt some watchmakers that they don't recover anymore, or it's more people learning their lesson to hold on a long-term basis, and then they would recover their.
It's more people learning their lesson. I wouldn't say there weren't a lot of casualties. I mean, post financial crisis of 2008, yes, we saw brands that just couldn't function anymore, um, couldn't pay their bills anymore. But this correction really was a secondary market correction. I suppose some smaller dealers, because what you saw during the pandemic was a lot of secondary dealers, people who were hobbyists who collected watches and decided, oh my God, I can make so much money selling these now during these lockdowns, that they became small dealers. Hard to say because there's not an organization or any real data around how many of those exist. So probably some of those dealers decided, okay, after this correction in 22, I'm just going to go back to my day job, or I'm going to pursue something else. Um, what what the correction made clear is that there are these handful of brands, the big four, sometimes a few others, that continue to earn premiums on the secondary market, or at least hold their value and then some. Maybe you can buy their pieces now at 2 times retail value on the secondary market, their most coveted pieces. But a lot of brands that were rising on the secondary market, earning premiums, and stopped. I mean, it's just clear that not there's a long drop off. There's a huge polarization. There's just the haves, the handful of brands I mentioned, and then every other brand that exists in the primary market continues to produce, but just doesn't have that kind of halo. They don't. You wouldn't consider their watch. They're collectible in the sense that you can buy it, hand it down to your children, and they'll have it and it'll continue to work. But it's not. I wouldn't say it's going to appreciate in value, or at least not at this moment.
Yeah,
There
but
are a few that do appreciate. They're rare. It comes down to rarity and quality and condition. Those are kind of the three.
yeah, the reason I'm asking is like in Bitcoin, when although the Bitcoin has been there for 15 years now, you still see every time there's a market correction, uh, people and a lot of noise about like very old type of FUD that says all this is a scam, Bitcoin has no value, and so on. So the price movement tend to reinforce or hinders the adoption and the beauty of this asset, the desirability, I would say, of this asset. Is it the same case for the watches? Like, does the price fluctuation, like are there any like strong advocates that all this industry is a scam, or like it's set and no people don't question that we're paying like so much premium for such an
Well,
antique product?
I mean, I think they do question when something is, when people are paying 5 times retail value. If a Daytona costs, let's say, 15,000 at retail, and people are paying, 80,000 or 75,000 for it on the secondary market, which was the case, and even more dramatic extremes during the height of this market. Yes, people question that that's not sustainable, but these watches have other purposes, right? I mean, people love, especially among collectors. I mean, yes, a lot of crypto investors that entered the market, the watch industry at its peak, fell away, but they left a community of people who actually just love watches. And so, people come by their loves of these timepieces different ways. A lot of people got them from their dads, a lot of men, because it is still a very male dominated industry. A lot of people learned about watches from their fathers or their grandfathers. And so there's an emotional connection to these pieces that maybe you don't have in the world of crypto. They're
So
tangible
price
objects.
action doesn't suspend the belief in the watch itself, basically.
I mean, not unless you entered it purely for speculative reasons. And a there was a portion of that market that helped raise the market that were purely speculators. Okay, so yes, they left the market. They decided they weren't interested in it. But it didn't collapse the market, and there's plenty of people. And in fact, we've seen, Phillips had its highest it was like an 83 or $84 million watch sale in Geneva in November, highest total ever for any watch auction.
Yeah,
So
so how do you spot when there's like a strong percentage of just speculators versus collectors? Is there a metric that you follow to measure the overbought signals from the watch industry to the underbought one? Is it just the premium to retail that is the main indicator, or are there other factors that you can spot to know that the market is in a hype
yeah,
or is trading at a premium?
I mean, I think there was no, it was hard to miss because of these incredible premiums that people were paying. We've I mentioned that there wasn't a lot of data, or there wasn't a lot of infrastructure around this market. I mean, for a long time, people would just buy, they'd go to their vintage shop on the corner and they'd buy a vintage watch from the dealer, and there was no metrics being collected. It was the most basic of transactions. Maybe they'd find them since 2010 online somehow, but um, I think that over the last few years, we've seen a few more platforms come up. There's something called Every Watch that is, I guess, a couple years old at this point. They track prices for basically all watches on the secondary market. They've tapped into dealers around the world. They know auction prices. They track all that. So yeah, I suppose you can. There's another company called Watch Charts, also tracks secondary market data, but it's still a pretty kind of open space for technology and metrics in that sense. There's just a new platform that just launched in November called Collected that wants to basically collect dealers, give dealers a place to do transactions online that will sort of track, allow them to invoice people. I mean, often you just get a text from somebody saying, okay, you want to buy this watch, it's, $100,000, you can wire it to this account. I mean, that's not uncommon. And you're seeing enormous amounts of money traded and transacted, but without a lot of security around those deals. So we are getting more of that in the watch world, but it's remarkably late. I mean, it's just coming up. So I wouldn't say in terms of metrics, there's a lot that you can see other than you can subscribe to certain reports that come out. Morgan Stanley publishes a report usually once a year on the primary market, and then also another one on the secondary market. So you can see, but yeah, I would say pricing is probably your best sign. Also, I mean, there was that whole moment during the pandemic when, and it was very obvious to consumers because people would come into a Rolex store and say, okay, I'm looking for a gift for my wife or my husband, and there'd be no watches there to purchase. Maybe they were
Mm.
just display models. You literally couldn't purchase a watch. So there were some instances of that. I think that's improved, but there are still watchmakers like FP Journe. If you walk into an FP Journe boutique and try to buy an Elegante, which is a quartz watch that has also incredibly accelerated in value, you can't. You have to put your name down. It's a 3-year list, and that's a quartz watch. It's not even his, what he's known for. So there are some makers out there who um, are just on fire, really. But there was never a point where this business, like, there was no collapse. I mean, the prices adjusted and became more sane, but it's not like the products became worthless. And again, because there's an emotional value to them too. So some people, the value isn't quantifiable, or it doesn't have a monetary value. It's your sentimental value. You can't really put a number on that.
I also noticed that similar that in crypto, like now, for example, in crypto, there's a lot of cases of theft and scams and kidnapping in France. Like there's a kidnapping every month to take
Yeah,
your cryptos. And I also noticed there is a big spike of pet theft, of people getting robbed their watches on the street, and it is a new trend. It's not like it has been there for ages, because they
yeah,
have appreciated so much in value, and there have been like a lot of liquidity in the secondary market and so on.
yeah.
How do you see this evolving in the future? I find it like kind of scary to wear $100,000 watch and go out on the street where you're like a walking
Well,
target.
I'd say, what's funny is a lot of the $100,000 watches are just more discreet than that. You wouldn't necessarily know. Like if some, I mean, it's the role. It's back to those big three, big four: Richard Mille, Rolex, Patek Philippe, Audemars Piguet. Those are more recognizable from a distance. There's tend to be sport watches, and I failed to mention that during the big appreciation in value, the big sort of more hyped watches, they were tended to be the steel sport watches on integrated bracelets. Those were exactly what was, hyped, and what people were after, and what went up to crazy sums. They're pretty recognizable. So you're getting out of a cab in London, or, and you're kind of distracted. You're walking the street and you've got a big flashy watch on that is recognizable. Yes, I would be a little worried especially in crowded areas where there might be thieves prowling around. But if you're wearing, a dress watch that has a lot of complications and is made by Kari Voutilainen, a very well regarded independent watchmaker in Switzerland, is a Finnish watchmaker in Switzerland. Who's gonna recognize that? I mean, what thief is gonna be like, oh, that Kari piece is gonna. I mean, they're looking for the pieces they can fence quite easily, right? And watches and jewelry obviously have that portable wealth quality. You can throw them in your pocket, and you are carrying quite a bit of value there. But you have to know what they are. You have to know how to fence them, how to get rid of them, how to sell them, and a lot of the smaller makers are just too esoteric. They're valuable, they're desirable, they're coveted, but they're just not sought by the mainstream. That's why Rolex is the number one most stolen watch. Same
Mm.
reason it's the number one most sold watch. It's because it's truly a global currency. You can take that off your wrist and probably get a seat on an airplane in some war zone if you
So,
really.
so you bet. So you're safer owning a not like a secondary brand that is an independent brand, rather than the big brands like Rolex or.
Probably. I mean, yeah. I mean, yes. Or like a vintage piece by a Jaeger LeCoultre is another Swiss brand that's beloved. It's the watchmaker's watchmaker is its tagline. But a lot of people won't recognize one. Vacheron Constantin. That's another brand that's they make a lot of these watchmakers. Their most expensive pieces are going to be their more higher end dress styles. Those just aren't, I think, as appealing to thieves. They just have much less of a market to sell them.
Hmm.
So yeah, I think you are probably safer wearing something a little quieter, more discreet, even if it's very valuable.
Okay. And now, if we look at the parallel between watches and jewelry, since you have an eye on both industries,
Yeah.
how do you see value in the jewelry industry compared to the watch industry?
Well, so jewelry has always clearly represented value when it's made of precious materials. They're funny enough, the industries have some parallels in the sense that watches will have jewelry, have gemstones on them. They will be, in some cases, more like jewelry than a watch. They're sold often in the same retail spots by multi-brand retailers, but they're very different industries and very different markets. Now, jewelry is an incredibly, it's family owned. I mean, other than the big groups and the big brands, it's still a very family owned business, or made up of thousands and thousands of families worldwide. It's still largely a generic business. It's not branded. I mean, there's a lot of opportunities for brands. Um, In terms of value, I mean, gold is the conversation of the year, of course. I think I just checked it yesterday and it's almost at 4,500 an ounce. When I started writing about jewelry in 2000, it was about 400. It's increased well over 60% just in the last year. It was at maybe 3,000. I mean, for a long time, 2,000 was the mythical
Yeah,
barrier.
yeah,
Oh,
but
wow.
the gold element is very limited in terms of price appreciation compared to the jewelry itself, because the jewelry can build a story on top of it, right?
You can, but jewelry is one of those things that for most of history has been broken down. I mean, you don't find jewelry that's it's harder to find jewelry that's old because people, in one era will think something's stylish, but in another era they're like, this isn't appealing to me. So they break it down for its constituent
So
parts.
they break it down to the constituents, and gold is the main constituent, or that's the most sought after constituent. So it's a proxy for gold. That's how you see it.
I kind of do, because the thing with diamonds is that even though, I mean, yes, you have your very special stones, your 10 carat blue diamonds, your Hope diamonds. There was a diamond that sold at Sotheby's for 8.8 million, a desert rose diamond, these colored diamonds. You do have very, very valuable, you know, special stones that do appreciate, cashmere sapphires or Burmese rubies. But primarily when you're talking about jewelry, it's hard to resell diamonds. It's De Beers did a good job in encouraging people to buy diamonds, and instilling in first it was men, but now all over, all of humanity in general, that diamonds represent forever love. Diamonds are forever, and this is what you buy for your engagement ring. De Beers did a great job in instilling that understanding in people. And but these were always new diamonds. To resell a diamond is tough work. I mean, you won't get what you paid for it, and especially with the influx of lab grown stones.
Yeah,
So lab
that's an interesting topic here because I mean, I have discovered these lab-grown diamonds, and they're like so cheap and so good
Yeah,
that I don't see how the diamond industry is not going to zero based on that, because
yeah,
on the eye you cannot see the difference. So how, like, you need like a whole technical equipment to see the difference from a lab grown to a natural one. So
yeah.
where do you see it going? Do you see it going otherwhere than zero?
No, I don't think, I mean, it would have already gone to zero at this point. I mean, so you do need equipment. So you don't buy a diamond just because somebody tries to offer you a diamond and says, "Yes, buy." I mean, as a consumer, you buy a diamond from a place that sells it with a lab certificate. So this has been tested, because at the labs they can tell. They know exactly. You can also sort of tell when somebody's selling you a 4 carat diamond for, $2,000 or $500 for that matter. Yes, that's definitely going to be lab
Yeah,
grown.
but you're not gonna go around with your certificate. Like if you're at a dinner and wearing a 2 carat solitaire, whether it's lab grown or real, nobody's gonna know. So it's the only way for the others. It's not the same as a watch where like everybody can see like what is this watch you're wearing, and you cannot
Right.
fake it.
Well, I'll tell you this. It has been the chief conversation in the diamond and jewelry industry for probably the better part of the last decade, and certainly since the pandemic, because again, the pandemic was another transition point where you saw a lot of lab grown providers enter the market, a lot of retailers who were long the gatekeepers. And for many years, retailers resisted because they had their inventory in natural diamonds, which are, exponentially more expensive. And so for a long time, retailers resisted them, but then they realized that there were margins in lab grown diamonds, less and less, but still great margins. They could sell a lab grown diamond and tack on a margin for their trouble that made them a very profitable category. So even though they're cheap at wholesale, they're still making margins for those retailers because they're able to buy them so cheaply and sell them for 500, 2,000, whatever it is. So it has been a topic. I mean, it is. I can't overstate the amount of trauma this industry is going through now, trying to figure out how will these two different categories, lab grown and natural, sit together. So
But
just this
isn't
fall,
isn't it going to be like a quartz moment, like where the story of the diamond will come to save the real world diamond? Because I know, like at Sotheby's, for example, they sell historical jewelry, and like this jewelry was worn by this famous actress or this famous princess or whatever, and
yeah.
they build this story around it to build up the auction and makes it a unique element. So perhaps there's something that will shift there. Do you see any premises of this kind of storytelling to make it desirable?
Well, absolutely. I mean, and it was already there in the natural market because for the most part, diamonds are associated with bridal jewelry. And so, yes, young people who can't afford a natural diamond or can't afford a bigger natural diamond have really, embraced lab grown and allow, especially Americans, because Americans love big stones. You can get a really big diamond for a very cheap price. And so the war is really over the bridal category, but there are a lot of people who are like, at some point you'll be able to buy those kinds of big diamonds if you can already, but at some point they'll be on Amazon for like $30. You can't, I mean, who's going to give that to their intended? Please marry me with this $30 Amazon diamond. So, the story really is, and De Beers has done its best. It's not an easy thing to figure out, and I wouldn't say the industry has an answer. I don't have an answer, but De Beers. One thing we're seeing is that when people are buying natural, they're now going for these stones that for many many years, for all of retailing history, were called off color because they were like, if a flawless diamond is, the color scale starts at D. A D is the most colorless, meaning the whitest, the cleanest
Mm.
diamond. A D flawless has no inclusions at all, and then it goes down the alphabet to Z, and the closer you get to Z, the more yellow or brownish it becomes. And so we're seeing people now embrace, when they're buying natural diamonds, these off color stones because they don't look the same as all the lab grown stones.
As
The
the
lab grown
love
stones
ones.
have a uniformity to them. When you see somebody at the market, just shopping at the market with giant diamonds on her ears, I mean, I think anybody who knows anything about diamonds at this point says, okay, well, they're obviously lab grown. And that's
And,
okay. I mean,
and
there's
isn't
nothing wrong with
there
it.
a craftsmanship to, because there's a design of the diamond, like not the diamond itself, but like how you make the jewelry out of it.
Yeah.
And even if it's just a ring, there are so many ways to build a ring, and there are some shops that do it well. So there's some kind of craftsmanship, some design, some uh, like a fashion industry type of. I know, like Bulgari has the serpenti and stuff
Yeah.
like that. So there's kind of fashion on top of it that could maybe save it. What do you think?
Well, listen, I don't even think it needs to be. I mean, at this point, it doesn't need to be saved. You mentioned Bulgari; they had a huge showcase of their latest high jewelry collection here in LA in October, and their CEO, he was just succeeded by a new CEO, but he was in town. They hosted 200 couples, pardon me, 200 clients, 100 couples, their best customers from across the US. I don't know how many millions of dollars of inventory, all natural stones, because these levels, at the Bulgari, Van Cleef, Cartier level, they don't do lab grown. Um, their high end business is not suffering. So yes, they had incredible designs, incredible, lots of colored stones, lots of big diamonds. I saw a huge yellow. It was, I think, called the essence of yellow, a big yellow diamond that I don't know how much it was, but certainly many millions. Um, I don't know if it's sold, but my sense was that that market at the very high end is not suffering.
Is here to stay. Okay.
And
Okay.
jewelry is as eternal as it gets.
Now, the $1 million question for you. So, as
Okay.
an asset manager, I spend my day analyzing the stock market, balance sheet, economic provision, etc. And my dream scenario would be to just buy a good jewelry or a good watch and sit, wait for it to appreciate, and don't do any any work. And some of these collectibles have performed very well and
Yeah.
outbeaten a lot of managers and a lot of hedge funds. So, is there money to be made? And if you want to invest in this market, how would you do it? What would you go for as a good value that will give you a good reward and return on your investment?
So, if you ask the dealers or the auction house experts, they always say, I mean, maybe a little less now, but they always say, these aren't investments. These are things to buy because you love them. That's the caveat. Because it's not a proven asset. I mean, it's becoming one, but I wouldn't say it has the history of real estate or stocks or anything. I would go for the blue chip makers. I would, when we're talking watches, I would go for those brands, the Patek, the
Yeah,
Audemars
like a
Piguet.
Rolex Daytona, and you just buy 20 of them and wait to them to appreciate because the brand is so powerful that it's here to stay. There is a hedge fund actually I saw that is launching a fund buying Birkin bags.
Yeah.
I found it like
Yes. Yes.
such an interesting, like, no, let them do the work for me, like create the
Right.
scarcity, the hype, the marketing, and so on, and I just wait for my asset to appreciate.
I mean, I think in as AI and as we just become, you know, as our world becomes increasingly more tech driven and digital, I think objects that are handmade, there is gonna people are gonna value them, covet them, seek them out, pay more for them. I think so. You buy blue chip brands, you buy the best you can buy, you buy the best models, you do your research. I mean, when you say buy 20 Daytonas, I mean, good luck because you need to have, I mean, those, especially if you're buying them on the primary market, they're not, you have to kind of, you have to cultivate a relationship with the retailer. They're not just going to sell you that because you walk in and ask for it. So, there's more work to be done there, but
Because if you
yeah.
buy them as a secondary market, they will not appreciate.
No, 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 they will. They will. It's just you're going to pay a lot more.
Ah, you have a premium.
Yes.
Okay. No.
So yes, I mean wherever you can get them, but you also, I mean,
So
for
it is
watches,
worth getting on the waiting list of Rolex just for the investment part.
yeah, I think so. I think
Okay.
so for sure. So, but a lot of retail, and it happens in the Hermes space too. There's a lot of bundling that goes on. If you walk in and say, and let's say you don't know the retailer and you want to buy a Daytona, they're going to say, okay, well, will you buy this piece of jewelry and that other
Yeah, I
watch?
saw that also in the wine industry. They do the same. If you want to go for a Romani Conti, you have to buy like the whole series of secondary wines, which are good wines actually because they're.
Right, and you can drink them. So there's
Yeah.
all that. Um, so yeah, so it's not quite as simple as just walking in and plucking it, but I would say you'd look for the rarity and the condition, and when you're buying a watch, you try to have as much documentation around that watch as you can. That's try to look for, especially if you're buying on the vintage or pre-owned market, look for box and papers, anything that has a documentation of provenance, because that is increasingly of interest to collectors, and they do value those things more than if you have a watch and you just have the watch, there's going to be some questions around, well, why are you selling it? Why is it, you want to be able to prove that it was, you know, obtained through all the legal channels. Um, so with watches, yeah, I'd say stick to the blue chip brands, stick to the most coveted models because they'll just be easier to sell down the line.
Mm, mm.
And Rolex is a great bet. Patek Philippe, great bet. Audemars, excellent. They just celebrated their 150th anniversary this year. These are makers that have been around and that have proven that they're staying there. Cartier, incredible. You've seen incredible values for Cartier. Cartier is a little harder because there's such a diverse catalog of pieces, but there's just utterly collectible watches like the Cartier Crash. Won't go wrong. Just can't. You can't go wrong. So if you buy those from a retailer, from the Cartier store or a mono brand boutique and sit on them, yeah, I'm willing to bet in. The thing is, it's not like I don't know how aggressive they are as assets, but they're safe. I think you'll be safe sitting on them and watching them accrue, in 10 years, 15 years, 20 years, 50 years for sure. Who knows? Who
Oh.
knows what's going to happen in 50 years? Will we be here? I hope.
Okay, thanks a lot then. Unfortunately, we have to wrap it up. It was a very exciting discussion. Thanks for coming on the show. And I'm going to watch very closely now the prices of watches and see if your advices turned out to be true.
Please, yes, check me, please. Go to Every Watch. That's a good platform to check prices.
Perfect. Thanks a lot, Victoria, to coming on the show and speak soon.
Thank you.
Take
Thank you,
care.
Jed.